Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Well, earnings season is upon us. How much does it matter? How much is it impacting trading and sentiment here this morning? That'll be the lead story. On today's show, we have JP Morgan, Wells Fargo, Johnson & Johnson, Fastenal all out this morning. Roku gave some prelim numbers yesterday. We'll talk about that as well. Our guest, Ryan Detrick, Senior Market Strategist at LPL Financial. He was joining the show at 8:35 to give us his take on these markets and where we stand. In the meantime, I'll bring Joel Elconin on here. Joel, what's the word here in the overnight session?
Green on the screen, Spencer. Just about everything on my front page is green here, except for crude, which is trading down 26 cents. Dip below the close yesterday. Our close at 59.25. Just had a slight dip to 52.5 and then turned around on a dime. Went north. Your pre-market high, 28.08. That's just short of, we'll call it the real high of the move. 28.0950 was your high on Thursday. They got a little excited in the Sunday after hours session and took it to 1950. So there's a target for you on the upside. But if we're going to do anything within the average daily range, we could be trading much higher than that. Our let's go March 10th high at 28.7350. That would be a real juicy target on the upside. Talking June crude here is down 24 cents, 29.02. You got the rollover between the May and June, so I know there's some treacherous trading in that. Gold, well over 1,700, up a dime at 1761.5. Silver having a great day trying to get over 16. It did earlier, traded up to 1608.5, up 39.3 cents at 15.93. And Bitcoin bouncing a bit, up $35 at 6,845. Well, I wanna pat Triple D and Spencer on the back yesterday. They were saying to buy the dip. I know I called a little early decline, but the buy the dippers are out there yesterday, Dennis, in full force.
Yeah, they're looking for any dip to buy. Props to you too, Joel, because you were calling the sell-off, which did happen right off the hop. You were looking really good with that call. So I guess we were both right, because I was saying buy any dip. Like I'm looking to buy the dips on stocks because I think there's so much cash on the sidelines and people now have the FOMO. And that's exactly what we saw here overnight. It's what we saw to a certain extent yesterday afternoon after we were down pretty substantially. It was a pretty steep sell-off, almost 100 points from the highs there, Joel, on the S&P. They came in with their buying shoes on once again. And if you look this morning, it's Groundhog Day. Same story. The earnings we've got so far, a couple nothing short of disasters, really, but expected. And this earnings season, I'm going to say the expectations are as low as they've possibly ever been in the history of all earnings seasons. The earnings expectations are so low. The bar is not even, it's not like a limbo bar. It's like buried beneath the ground. There's very little chance that a lot of companies are going to become able to come in under the bar that is so incredibly low. And let's just go to the two banks that have reported this morning, JP Morgan and Wells Fargo, both missing substantially, which was to be expected. And I think that's the issue, is that for the bears, the issue for the bears is that this market has so much bad news already priced into it that it's going to be hard to shake the buy the dippers.
I'll just give you the numbers here for, I guess, for both of them. So JP Morgan reported, I don't know how much the earnings matter. They probably don't matter much. The earnings per share for the earnings per share for last quarter, 78 cents versus a $1.84 estimate. So big miss, but not
That's not a forward-looking number in any way, shape, or form. The sales in the first quarter, 29.1 versus $29.6 billion. So light on that number as well. Again, I don't know how much that matters. They did set aside $8.29 billion for bad loans. Did JP Morgan? That's interesting.
Well, that sounds bullish.
Sure. Also, the only real guidance that they gave was with regards to net interest income, which they guided would fall, or they lowered it from 57 to 55.5 billion dollars. But aside from that, they really didn't give any forward-looking statements of any kind in their report. And I'll just pull up Wells Fargo.
So just to summarize, they miss big on time on the top. They miss big time on the bottom. They take down a whole bunch of money because they're anticipating a lot of bad loans, and they didn't say about anything going forward, and the stock's up 1.2%.
Yeah, I mean, their trading revenue is up. That's good, right?
I would hope so. If you're a trader in this and you're doing any type of inefficiency trading, you're kicking some butt, really. I mean, like I said, March was my best month in 11 years. So, I mean, this from a trading perspective, like my day trading account, which is at Bright Trading, that was my best month in 11 years. So, I mean, yeah, that's why you think like Virtue Financial are going on the tangent. They're probably kicking butt. I mean, I like that wasn't even my best month in 11 years. I think it doubled any other month that I've had in the last 11 years. So March was just incredible trading.
Yeah. So again, throw the estimates out the window. You can honestly kind of throw the numbers out the window too, because they missed badly. You knew it'd be bad. To me, the fact that they didn't really give any forward-looking statements is more notable than anything else. Wells Fargo here, they reported 1 cent. Is that right? A 1 cent EPS versus a 61-cent estimate.
Yeah.
And revenue of 17.7 versus $19.3 billion. So again, throw those numbers out the window because we knew they'd be bad. They really don't matter. I don't know. I mean,
bad loans coming their way too. Did they say anything about preparing for the bad loans?
They set aside $4 billion.
Okay, so they're setting. Yeah. So both banks setting aside because they know some bad loans are coming their way.
Yep.
I mean, it's a matter of how ugly it gets from the bad loans perspective. So right now, we saw it with the economic data. You know, that was the tip off that they're probably going to buy the stocks, or they were buying the stocks on that horrible economic data. So they're probably not going to sell them off on bad earnings either. Eventually, you get a little ways in, that trade will get crowded and they probably will start selling off some. But if you're reporting early in this earnings season, you kind of got to pass. I mean, Johnson & Johnson, let's go do their earnings too. I'm assuming their earnings were actually good because J&J would have sold out just like Costco. And the stocks that have held up, if they, so let's clarify something. The stocks that are in the gutter that have, you know, basically have been going down, and you know, obviously rallied in the last couple of weeks, but the stocks that have been hit significantly from the all-time highs, those are the ones that are getting the pass. The stocks like Johnson & Johnson, which are not even that far from their all-time highs, are not going to get a pass. So I'm assuming J&J's numbers were actually good.
They were actually good, and they gave some guidance, which I was telling Joel yesterday at 4 o'clock. That's what I wanted to see. So the adjusted EPS for J&J, $2.30 versus a $1.99 estimate. Sales of $20.69 billion versus $19.4 billion. So they beat on both their estimates for the top and the bottom line. They also cut their fiscal year adjusted EPS guidance by, it looks like about $1.50. They cut it from the high $8, low $9 range to the mid to high $7 range. But the fact that they even gave something is notable to me. So they gave us some sort of new bar to reach for, and they beat on both their numbers for last quarter. So I like that.
So nice beat on the top, nice beat on the bottom, and they gave us some guidance. That's pretty good. So there you are on J&J. It's trading up here. One thing I will say is I'm not chasing J&J and all-time highs. Like I know it's a ways off from all-time highs. I think it's 154, but here you are. You're 7-8% away from all-time highs. The stock was $110 when it hit the lows there 3 weeks ago. Now you're going to come in and if you're buying at 144, you're basically saying this is going to all-time highs. I don't think they want to pump anything to all-time highs. I think a lot of good news is now priced potentially into Johnson & Johnson. You know, we know that they're working on some therapies or potential vaccine as well. So, you know, some of the drug stocks have had pretty good moves and they're not that far off the all-time highs. So I'm not buying any stock that's sitting 3-4% from its all-time high or 5 or maybe 7% in this case of J&J. So nice numbers. I'm probably not going to short it either, but I'd watch it. If this one, you know, opens up and starts to leak right away, then you could see the potential at, you know, because it's a crazy market right now. If they hit the stock with the good earnings and buy the stock with the bad earnings, it's a funny market right now. So, you know, fundamentals out the window. It's all about technicals here, and that's why we're going to bring in our technical analyst here now to break down the action in all of these names.
Yeah, let's first go with the JP Morgan, and as I've reiterated, this is a stock that I've gotten tagged trading on earnings day. It got just extremely all over the place and wild. But what I'll say is that there's someone that doesn't like this stock at the 100 and let's call it 150, 160. Since 6:30 this morning, you've had several highs in that area. So if you're targeting an early long, you know, let's see what happens at 10050. If it clears that, then you got a shot at the high from yesterday. And yesterday's high was 103.11. That's not quite the high of the move. 104.43, 104.39 is that level that has been the high of the rebound. I want to say that both now just go to the Wells Fargo. They have not regained near their 50% like the rest of the market. So they're not getting hit because they didn't rally as much as some of the other stuff. All the stuff that went back up to the 50%. For JP Morgan, if JP Morgan's truly out of the woods on this, they're going to get to 109. And not today, obviously, but they're going to get to 109. They're going to close above 109.
Is that the 50%? Why 109?
That's 50%.
50%.
Yep. So, hey, you know, if you're playing it up to the long side, that's your number. You want to see it get there. You want to see it get there in a hurry. If not, possibility of it rolling over. And then you can easily figure the 50% of what the rally is. But that, and the same thing on Wells Fargo. Now, Wells Fargo, I had to figure the 50% from the second butt kicking that it had. I'm not even doing it from the all-time high. I did it from the 2020 high, and that 50% is at 39.93. I mean, Wells Fargo's might never get back to the 50% from the 65. That would have to go to 45 or 50. So, you know, room on the upside, pre-market trading. They got a little spike. With Wells Fargo, I think you can use the range from yesterday. You got some pretty good levels. 33.24. We're a buck away from that. You want to see that get taken out. 2-day high is 33.91. Coming back on the downside. Obviously, let's see what happens at the close. 31.41 was the low, and 31.43 is the close. If it did go red on the session, I wouldn't pay too much attention to the 2-day low. I would look for this thing to trade under $30 if it goes red. Johnson & John, we mentioned yesterday on the other show, strong, got up to what? You had a quick spike to 146.50. Back under that now. The dailies tell me, and I don't know if you got anything, 145.42. I would use that as a target. Yesterday's high, 141.49. We'll use that as support. But $2 away. It really hasn't been stopping on a whole number or anything. Can you see if there's anything at 145.50, Dennis?
I'm trying to open my book right now. For some
hard.
reason, it's hanging here, and I don't know why.
Okay.
Like I said, I got to get a new computer on the side computer here. Obviously,
Okay.
I guess I should just order off Amazon. Usually I just go into Best Buy and buy one, but I guess I can't do that. So, or maybe I could do the curbside or something with Best Buy. But for whatever reason, this computer that I run my open book on, I basically run the show on it, and I'm running the open book on it. And that's pretty much all I'm running on this whole computer. And it's just like sits there and hangs half the time. It's an AMD processor, which, you know, I've said I like the HP processors better, but it is 5 years old. It's too old. So my trading computer is good. But you got to have a good trading computer. But, you know, when I'm only running 2 little programs, I've been lazy with it. And I need a new one. So whatever reason, I don't know why it's not opening up here. I'm going to have to maybe reset the computer. So I have no book. So JV Spec, if you were there, it would be interesting to actually look.
He says no size.
No size on J.
Yeah.
J&J said 150 is 133,000. That's obviously out of play. I would hope. I mean, the markets gets crazy though. That gets anywhere near 150. You know, if that like just gets silly, I'm not saying it's going there. I'm saying absolutely all we do is scenario analysis. But if people get just stupid, in my opinion, and you know, it's a bad word to use, but if people just get silly or whatever, I always say don't, you know, I got the 2 and the 5-year-old, so I never use the word stupid anymore. I use silly, but it gets up near 150. I think there's a wall of resistance up there. And I'd be a seller up there in the 149s. Like, so I would actually attempt to short if it got into the upper 149s, especially with the JV spec size that he's talking about, 133,000 shares up there. But I don't think there's any chance of getting up that high.
Let's just talk Roku. Get away from the earnings for a second here.
Well, this is earnings kind of, because they gave some preliminary numbers for their upcoming report for the quarter that just ended here. So Roku, I'll pull the chart up here. Preliminary Q1 sales, they gave a range of $307 to $317 million versus a $299 million estimate. They expect Q1 streaming hours will be 13.2 billion, which would be a nearly 50% increase on a year-over-year basis. They talked about how much cash they have, and they said their preliminary Q1 total gross profit will be around $140 million.
You know what? I'm kicking myself on this one. This should have been obvious. You know, anything streaming at this point in time is doing very, very well. People are sitting at home. You saw what Netflix has done. You saw the Disney. I mean, Netflix is making, is that all-time highs for Netflix? Very close, very close to all-time highs, very close. So Netflix, and the Roku number is going to help Netflix too. So don't kid yourself. You could see some follow through from that move yesterday. If you were fading off 400, I'd be nervous because you could see some follow through here in Netflix with those good Roku numbers. But people are sitting at home and they are streaming, and Disney Plus numbers blow it away. Netflix has been running. You know, they're going to have good numbers too. So Roku having, you know, a strong, you know, numbers and strong guidance is not surprising whatsoever, really, from a logic perspective. And this market is trading off some logic. It's a rip now, ripping up 14% here this morning. That's incredible. That's just this market.
Spencer, who was asked us this about on the at the close show? I can't remember, but someone said, and I looked at the chart and I put it on my front page here because it just looked like itchy. You know, it had the good day, it had the green day, and I looked at it and I'm like, wow, above 96.80, this thing really opens up. It also had a strong close at 96.56. And I thought it could easily see, triple digits, but that trade's over with. I'm not going to buy it up here. I can just give you the pre-market high. Pre-market high comes in at 112.79 is where it got to. I think that's correct. 112.79. Oh, and then it went up there again and it stalled at 112.78. So you got someone sneaky out there to, maybe targeting the whole 113 area. So if you are taking a long in this off the open, or you're looking to exit along, I'd see what happens at 113. On the dailies, there's a high at 114.75. So that's
we're through the 50% on this. Are we? I'm taking the high, that 151 down to, oh my goodness, it's got down to $58.
Well, 168.85.
Yeah,
I got 168.85. I could.
Well, that's the all-time high. I was looking at the recent move.
Oh, the recent high.
The all-time high is 176.
I was just looking at that 151 in February.
One more number I'll add here is at the end of last year, Roku had about or a little under 37 million active accounts. They're saying they added 3 million active accounts in the first quarter. So they're going to be a little under 40 million active accounts.
I'm not surprised that they're kicking butt right now in this environment. I mean, that's what you got to logically think about. And Peloton too. I got to think that they're selling a lot of those bikes. And my neighbor, TJ, was asking me about this one. He's long it. Congratulations, TJ. I think this thing continues. I think there's room to 35. I got shaken out of it. And, I made a couple points on it. It hung out for too long. I got shaken out the day that they were whacking Zoom and whacking TDOC. And I talked myself out of it. And that's terrible on my part because I wanted to hold the stock to the quarter. I think Peloton's got room to 35. I'd be a buyer pullbacks on that one too. Fundamentally, not in the long-term account, but in the swing trading account.
Long-term account, still got it. No target.
Nice.
Didn't. Did not do it yesterday, but I think I've done it 6 out of the last 7 days. I'm losing weight too. Can you guys tell I'm losing weight? Man, I don't like this quarantine. I'm not.
Look at this. You know what? I'm actually, believe it or not, the craziest thing is I weighed myself and I kind of felt like I was a little bit lighter. And I'm down to 203 and I'm hardly exercising. But you want to know why I'm losing weight? Because I'm not eating out. Eating
Exactly.
zero takeout.
Yep.
So you think about the calories that, normally we go out, I go once a week probably to McDonald's because the kids like love it. And so that kills you. But then we always go out and usually Friday night for a nice dinner. You go out, you don't think, a fancy dinner. And then you go out, maybe another night. There's usually 2 or 3 takeout meals in there a week. So you think about that calories gone. And, I'm not really doing that. I'm outside, doing yard work and, I'm doing some things, but my treadmill is currently not working, which is not good news. I don't know what happened, but it's like 8 years old. And for whatever reason, it doesn't want me to exercise. My wife tried to go on it yesterday and could not get it working. And it's been finicky. So I need a new treadmill. Maybe I should order a Peloton.
I'm 200 bid. I am 200 bid. And
then 200. You don't think I'm going under 200
and
on my weight.
And then I will go when we come out of quarantine. I'm gonna buy like the 205, 210, and maybe the 215 calls.
215 calls. I've never been to 215 before. If I go to 215.
All right.
215 would not be good news.
Enough of the diet talk. People are gonna get mad at us.
All right.
More.
I want to go to Dick's here. Dick's Sporting Goods announced about 20 minutes ago or so that they are suspending their dividend and buyback programs.
Is the stock down?
It is. And they don't know when their stores are going to reopen. So
okay, I'm not going into any retail. On the dips, I said it yesterday, I'm staying away from ground zero. So buying nice tech stocks that have some cash on pullbacks, buying, higher quality names. Sorry, Dick's, your retail. I like your name, obviously, because my name. But with that being said, down 10%. Does a pullback get bought? Possibly, but there's just so much bad news to come, from a fundamental basis from these retailers. It makes it really tough. I mean, nobody, some are doing curbside, but the sales have got to be just terrible at all these stores. I've got to think that retail is still ground zero, the epicenter for this. Obviously, cruise lines, airlines, we know that, but retail as well. Retail was already in trouble before this started. And not obviously Amazon. So I shouldn't say just retail, but I'm talking brick and mortar retail has been in trouble for a long time. And we gave this analogy a couple of weeks ago. Was this, was COVID, they were some of these companies were just sitting on the cliff. Did COVID push them off the cliff? That's the question we still don't know the answer to. I think there's going to be, I don't know if Dick's, some of these bigger retailers might survive, but some of them might not too. So I'm scared of owning any retail stock. The only retail stock
Amazon, and I said this before. I said anybody asks us about it, just buy Amazon.
Yeah,
that's it. Just buy. Dennis, in the chat, BM wants you not to buy any more computers. He or she says they can build you one. So if you want to reach out to BM, they can maybe send.
Wait, didn't you just buy one like a year ago? You just bought a new.
I got caught. Yeah, but I probably did because I'm running 3 boxes here and then I'm running 2 up north. So I got 5 boxes total.
Oh, man.
So I'm running 3 boxes here. So I think one of them died up north at my cottage. I used to actually travel with the computers back and forth. I'm like, screw it. So I didn't feel like traveling with them. So I just bought extra boxes. So I basically set up north, although a little lighter up north because I'm running it on 2 computers up north, but they're both new boxes. But yeah, I think one died last year. My up north one did. So I replaced it. But these things have life expectancies of 3 to 5 years. You get 5 years out of your computer, it's pretty good.
You know what?
Yeah, I need another one now.
I've been buying Dells since the early 90s. And old Dells.
Dells, okay. I have good luck with Dells.
I bought this Surface, but it's like, if you ever see me like squinting down like this, it's like I'm trying to read my Surface. I can't change that. You should be able to change the font, but man, how's Dell stock doing? I mean, I'm old Dell.
I own this one. This one's been bad. I've owned this one for a long time now, a couple years now, and I'm in from around low 50s. I got up. It went and I had a nice run. It ran up to over 70. I was up significantly in it back in the beginning of 2019. But it's been straight down ever since. They do a lot of debt too, which is an issue. But it hasn't, obviously Dell 2 is also play on VMware because they have a huge chunk of VMware still. So if you look at VMware and Dell, those two stocks do follow each other. I have this one in the long-term portfolio, but it's been a dog. Bark, bark, bark.
Buy more.
Never frown, average down, Joel says. No, I don't add to losers. Not even in the long-term portfolio. I rarely add to losers. I have done it before. Usually not successfully, though. Usually those are really bad ones.
Okay. All right. Did we get all the earnings out of the way, Spence?
We could do Fastenal if you guys would like.
Sure, nuts and bolts of the market.
Yeah. Fastenal Q1 EPS 35 cents for they beat by a penny there. Sales $1.36 billion is in line with the estimate. So essentially an inline report for Fastenal there.
It's up 5%. A stock I've always wanted to own. And you know what? Adding it to my shopping list, I'm obviously not going to get it on this earnings pullback because there isn't one to be had, but it's a stock that I've wanted to own for a long time. I had it once in the long-term portfolio, and then I sold it, and I wish I wouldn't have. I mean, you get back down, and obviously, wow, we got a shot on Fastenal down to $27 or $26. I guess I should have my shopping list back then, but in mid-March, it looked like a lot of companies were in a lot of trouble, so it's scary to pull the trigger then. It gets back down, in the low 30s. I think Fastenal's the buy. And obviously, it's I joke the nuts and bolts, but it is. I mean, this is what the nuts and bolts of the construction industry there, Fastenal. So I love it. I love it in the low 30s.
Even though we're not building anything.
Yeah. Just because they're nuts and bolts going away. I mean, and obviously you're making a good point. I mean, could this, get hit with a recession that's imminent? Yes, but a lot of bad news has been priced in too. I mean, you're at $39, you're down at 30, so you're talking about 20 to 25% sell-off. It's a stock that I've always wanted. Maybe a wait, but I'm not sure even, if this market, like we've said, the lows apparently are in. They're buying dips like crazy. The buy the dip hat is on. I've got my buy the dip hat on. I'm buying dips as well. So on a Fastenal, if it was for whatever reason to turn around and start to sell off, I'd be a buyer.
All right. I probably mentioned this before on the show, but my cousin Jimmy and his family, his owned this stock. Well, it was founded in 1967. They probably have owned this stock since the 1970s. And I've talked
been around that long, eh?
Yeah, it was founded in 1967, and he's just
he must be up some money.
Yes. Cousin Jimmy's a good investor.
I think I held from the 70s.
Yeah.
Unless, it was one of those that obviously didn't make it, like your Sears or,
yeah.
But you're probably doing pretty good if it's still kicking around.
Yes.
I can go back to 1988 and the prices, I can't even tell what the price is. It's pennies because obviously it's went up so far. So it looks like it was trading.
Yeah. Let me, you know what?
A good one.
So let's see.
Buy and hold worked in Fastenal.
Yeah, buy and hold worked in Fastenal. I haven't tried to talk them out of selling it too many times. But what I did notice, it's up $1.73 on 18,000 shares. So it's pretty good volume. I'm just thinking, what about the seller at the 33.5 area? Is he done? 3 out of the last 4 highs were right around, you call it, you could call it 33.50. So it's traded up to 34. Pretty good volume. Someone's goosing it here pretty good. So 33.50 I'm still looking at. It closed above its 50% on one time. So even if it goes into reverse and closes over 33, I think that's a good sign for the stock. If you want to go to daily highs, you got to look at 35.46, and that was your high on the 19th. I'm not going to give you a target like that today because I think that's a little bit too far away. But let's take out that pre-market high, get going. Next daily high I see is 35.45.
All right, that's it for the earnings. I have some more on my list, but I wanted to share the love.
Can we talk Tesla?
We can talk Tesla.
What an incredible move yesterday. Follow through here again. Jason Raznick must be smiling in his quarantine here right now, because this stock's been straight up since he was on the show. 446, the low, just the recent low, April the 2nd. It is now 698. So you're talking
crazy.
Well, $250. It's up 60% in 1, 2, 3, 4, 5, 6, 7, 6.5 sessions. It's up 60% in just over 6 sessions. 10% a session. That's just such an incredible move. You're buying it now, you're doing it backwards. The 50% retracement of this whole move, Joel, even to the all-time high, 968, took us down to 350 at the lows. So what is that? A 600 point move. You're 300 and some up. You're just above it right now.
Yeah. Couldn't have been more wrong about this one. Is there news on it today?
Does it need news?
They are catching an upgrade, as if that matters, from Credit Suisse. This doesn't matter. They're upgrading Tesla to neutral, and they're raising their price target to like 580. So that,
you know, it's the craziest thing. Look in the pro and the headline here: Tesla striving to cut costs by seeking rent relief as coronavirus affects businesses.
Yeah, that too. They're furloughing their hourly workers, and they're
bullish.
Trying to.
I know, it's insane.
Trying to negotiate their rents downward.
Bullish.
The craziness is, again, there's so much bad news in this market. Money managers are so, maybe Craig Johnson was right when he's on. Money managers are just so hungry for stocks. They're throwing all the fundamentals right out the window. Nobody cares about fundamentals here. Nobody cares that you're seeking rent relief because you obviously can't, or struggling to pay rent. We're going to buy the hell out of your stock. I mean, it's insanity how much people are just so hungry for stocks here. It is absolutely insane to my logical thinking. But that being said, I'm buying pullbacks too, because you can't fight the tape. You can't fight, you know, it's been trading logically for a while, but now the market, not buying pullbacks in Tesla. I'm not buying pullbacks in Tesla, but I'm still buying pullbacks. And Tesla is a market darling. Tesla and Amazon are both market darlings. Amazon a little more justified because they're obviously
everyone's
not suffering at all right now. If anything, it's getting better. But I can't understand who's going to go out and buy, you know, a $50,000 or a $70,000 or an $80,000 car right now. I don't understand.
Everybody, Dennis.
Everybody
is
going to buy a new car when they can't pay rent. I mean, these people weren't going to be the ones that were, it's a higher end car. So I guess the higher end money's still there. So, you know, it's obviously not your average, you know, worker that's buying a Tesla. So,
right. Well, I guess if Ford and GM and Fiat Chrysler all go out of business, then
nothing left.
Yeah. Did you see Ford said that they have enough cash to get through the end of Q3?
I mean, it's liquidity now they're talking
that crazy?
about here. It's so scary to think about this, that we're now just talking, you know, liquidity. So they want to say, so we can get through Q3. Ford's good to get through Q3. So if they're just banking like with the shutdown. So the shutdown, that's actually pretty good news when you think about it, though. If the shutdown is, you know, longer than Q3, Ford's going to need money.
I think we have bigger problems
that's
than
quite
that.
a while to be able to hold on.
Yeah, I think we've got bigger problems if the shutdown is still in effect at the end of Q3.
If the shutdown's still in effect in Q3, and let's talk about this, because you got Trump in that presser last night. I know we have a lot of Trump lovers out there, but holy cow, Trump, I don't know if he did that good a job on that presser last night. I don't say anything negative about Trump, because if I say anything negative about Trump, everybody hates me for it. But I'm just going to say that presser last night was a mess, you know, and I don't know who, you know, with everything, but they did the little, you know, the video off the bat and then talking and fighting with the reporters. He was fighting with every reporter there. It's like, holy mackerel. So anyways, but what the take from that presser is, you can see it. Trump wants to get this economy open as quickly as possible. And they're talking about May. They're talking about getting it open. And, you know, whether he has all the power to do that, which he kind of said he did, the total power or whatever, you know, obviously isn't the case. It's going to be a governor to governor decision here. But they're trying to get this economy open. The stock market wants to hear that. It's probably the catalyst for, you know, the rally, because we were rallying before all these bank earnings, that they want to hear this economy is going to open quickly. The stock market wants that. Wall Street wants the economy open. regardless of the lies, Wall Street wants the economy open. You have economists that have come on CNBC saying open the economy. So when they hear it from the president and he's hinting around that it's going to be in May, then, that's going to rally the stocks. I think it's a mistake. I think you've got to keep this thing on lockdown as long as there's still, the potential for the disease to spread. There was a paper that was saying if we could keep it till the beginning of June, that we'd have a pretty good shot at, containing this thing, and there might be 0 deaths even by mid-June if we were to keep the lockdown for the extra month. Sounds pretty good to me, but again, you have a balancing act as a politician. You got a lot of companies paying you significant amount of money, obviously, for your campaign. So you got to balance that. And you have some companies that are, don't want to see it closed in May. So what are your thoughts here? I mean, are we going to reopen in May?
Well, let's get our guest thoughts on this, as a matter of fact.
Let's do it.
So I'll bring Ryan Detrick on. He's a senior market strategist at LPL Financial. Joins us periodically here on PreMarket Prep. Ryan, good morning. Oh, let me unmute you here. How's that?
There we go. You tell me. You hear me okay?
Yes.
Perfect.
All right.
Thank you.
Ryan, what are your thoughts here as far as potential timelines that are being discussed to reopening the economy? What would be too soon? What would be too late? Do you have thoughts on that?
Yeah, I mean, first off, guys, thanks for having me back. But that's the ultimate question, right? And you guys just hinted at it. Whenever someone in Washington, specifically the president, says we're looking to reopen things, what happens? The stock market rallies, right? I mean, that's what the stock market's looking forward to. But it's so difficult because we all know there's a potential second wave. There's obviously no vaccine, no major cure. Every day it seems like we're hearing some new biotech with something really positive. But my, oh my, I mean, our base case is this is probably going to be another 4 weeks or so of shutdown and then the slow rolling opening here and there. But it is just such a difficult situation where, earnings season's starting, right? And it's like this could be the least, looked at earnings season ever because it's like, okay, we know everything was bad last quarter in the last couple of months, but it's all about your guidance. But even then, do you really trust any company's guidance? Because everybody's kind of flying blind with what's going on. And that's what makes this such an amazing, difficult year. At the same time, we're looking at this recession potentially to be the shortest recession ever, right? We had a 6-month recession in the early 80s. And think about that. That was kind of government enacted. That's when Volcker raised rates to kill inflation. This is a lot like that. We're clear this is kind of a government enacted 80% of you stay home. Well, that's going to cause a recession. So can the government stop it and start things back up quickly? That's the ultimate question. But we really do think as violent as this is on the way down, we've all talked about this, all the fiscal stimulus, all the stimulus out there, monetary stimulus, the Fed does something different every day, it feels like. There's a lot of kindling for if we can get, kind of moving another quarter or so. Boy, oh boy, the second half of this year, from an equity point of view, there's a lot of reasons to think it can go higher. And it's, again, last thing I'll say, then back to you, the stock market is not the economy in a situation like this. The economy is obviously horrible what's going on, yet last week, the best week since 1974, when you look at major weeks like that, 74, 2009, what happened last week, big weekly gains have happened at some major inflection points. As bad as it looks, wouldn't it be something if the market kept going higher here?
I mean, the market's forward-looking. It's a good point you're making. And, I can remember taking that back, and even when I was doing my CFA, I can remember, reading chapters on it. It says it looks ahead 6 months. So if you're looking ahead 6 months, we're probably open. And maybe I don't know if we're going to be back to business as usual, but we could be back to some business. And that's what the market is banking on, is that, hey, we see the curve flattening here. We see some light at the end of the tunnel here. So, and we've got a lot of money managers who, threw all their money into threw their money out of stocks and into money market funds back in March, and they're scrambling to get back in. And that's why every time
I just got an email, the Bank of America April Global Fund Manager Survey. Here's the highlight, but highest level of cash since 9/11. I mean, not surprisingly, let's see here, 93% of investors expect a recession in 2020. To be honest, I'm surprised it's not higher. But the reality of just this one survey of about $600 billion, a lot of cash on the sidelines. It's cliche to say, but at the same time, when everyone's asking, is there going to be a retest? Is there going to be a retest? And the reality is when you see 99% of stocks above their 200-day moving average, like we just saw the other day, that tends to suggest you're probably not going to see that ultimate retest. We definitely think stocks are going to consolidate and chop around, but to see the retest, it just as a technical guy, I remember when we made the lows and bounce, every single person was talking about a retest, including myself. And it's like that contrarian in me wonders, are we just going to have a V bottom or maybe a square root bottom? But a retest is getting less and less likely when you see that much internal strength. I mean, it's extremely rare, and it normally means, 6 to 12 months from now, boy, oh boy, you're going to resolve higher.
Like
What's a
Joel
square
and I-
root bottom?
Go
Square
ahead, Joel.
root bottom.
What
Square
kind
root
of bottom
bottom?
are you saying?
The square root bottom, right, is where it's down and goes up and then kind of goes sideways. So it doesn't make that W.
Nice.
It
I
doesn't
like
go
that.
all the way back down.
Did you make that up? I never heard
it's
that.
eighth grade math.
I've never heard that. Is that a Ryan Detrick bottom? Is that one of yours?
You don't want the Ryan Detrick bottom. That's not good. But I've heard square root bottom with the economy,
never heard
right?
that one.
I play an economist on TV sometimes. It's one of those kind of
love
goes
that.
sideways but not down. But yeah, it's that's kind of I always like using the Charlie. I think the bottoms are a Charlie Brown shirt, right? That's easy to understand. The Charlie Brown shirt's a frustrating time. It just takes time. And you talk about we've looked at the recessions, and it takes in '87, for instance, we had a 34% correction, ballpark what we just had right now. It took 20 months for stocks to make a new high. We think maybe we could be in another situation like that, but the reality was 88, 89 into the 90 recession. There are some really good gains, nice, slow, and steady, because everyone's just shell-shocked by what happened in '87. This is not '87, I'm aware, with the economy, but from a market point of view, that's one of those similar situations, and it just makes sense to us that the economy could bounce back. The upside potential is still there.
What sectors, though? I know y'all and Spencer has some charts you're going to share with us and stuff, but if the restaurant sector's toast and the hotel, those, we're going to be the new sectors leading us back. And you got tech, you got Zoom, you got Netflix, Walmart. What's going to be the sectors that lead us out of this?
Yeah, our two favorite sectors are the two that have been leading most of this time, right? Technology and healthcare. You look at earnings, and look at this earnings season, technology, once again, is one group that's expected to have positive earnings, actually, in the first quarter. And I know it's all about the future. But, there's just a lot of momentum there. And you look back at major market bottoms, back to the Great Depression, more often than not, about 75% of the time, 3 months off those lows, 6 months off those lows, technology tends to lead. And then healthcare, look at some big picture relative strength things. Healthcare is just breaking out, right? This is a group that potentially could lead for years. Now, you talk about what to maybe avoid or at least be a little skeptical of. Look at the tech bubble, right? Well, tech led into the tech bubble. Tech didn't do anything after the tech bubble. Financial crisis. Financials didn't do well after the financial crisis. Now we're looking at, like you said, the restaurants and more of some of those consumer names. Those are the groups that are going to be the most hit by this crisis. And the playbook would tell us those are probably the groups that won't do quite as well. So overall, we still have a little bit of a tilt toward growth also. The interesting thing there is when you don't have a lot of economic growth, investors reach for growth stocks, and we've got a little tilt toward growth. But technology and healthcare are two groups that we've been overweight for a while, and we still like large caps over small. I know what happened last week where smalls had a huge rally as the Fed said they're going to start to actually buy junk bonds, which helps small caps. But bigger picture, we still have a little tilt toward our large caps, and we're still comfortable there as well.
Love those two sectors, and that's where I'm putting my long-term portfolio too. I've been talking about buying strong tech stocks on pullbacks. That's what I like here. Those growth names that we couldn't get before. Buying those on pullbacks is working, and then healthcare obviously is not a sector that's getting hit by this at all. So I completely agree with you. This dash for trash, which is really what we've seen in the last 3 weeks, where a lot of the stocks that appeared to be going out of business in mid-March, those are the ones that have rallied the most. But again, they were beat up so much. But if you're coming in buying these things now, like a Dick's Sporting Goods here this morning, you get punished for that because it comes out this morning. And obviously, there's major issues there with some brick and mortar retail. And some of these sectors were in trouble before this whole thing started. So those are the sectors that I would avoid as well. What are your thoughts? I just want to get your thoughts on oil, because it's obviously a sector that was in trouble as well. We saw a big historic deal apparently over the weekend. That rally got sold. If you just look at the USO even on the chart, it continues to really not, perform well at all from a relative strength perspective. What are your thoughts on the oil sector?
You're right. Oil is a group, and energy really, I guess we'd say, out of the 11 S&P 500 sectors. We've been underweight energy for the 4 years I've been at the LPL, and we're still in that camp. There's just it's demand, right? I mean, who's really I mean, I drive like a mile to work. I stay for a couple hours and go back. Most people aren't doing that. I mean, the demand is just not there. You can cut all you want, 10 million, 15 million, 20 million barrels a day. It just feels like the demand is nowhere there. Now, what the Fed did last week, saying they're going to start to buy the high yield ETFs and high yield bonds and the fallen angels, I mean, that's specifically going to try to help the oil sector, energy sector, which is hundreds of thousands of jobs in the United States. But from a pure investment point of view, that's just a group that we haven't liked for a while. And if and until we finally see some relative strength that actually lasts more than a couple of days in the group, it's just a group that we're not too warm and fuzzy on. We'd still kind of stick with those leaders, which are tech and healthcare, and just still kind of avoid or sell the rallies in energy stocks, in our opinion.
All right, Ryan, you sent us this chart here, or you sent us a few charts, but there's one that I love here of large bounces being normal during a bear market. We just bounced, what, 25% in the S&P, something around those, something like that. And this is just a list of the major bull and bear markets and the bear market bounces during said bear market as we got to the bottom here. And it provides some context. Show us talk about this chart for us, because it provides some context for how bounces like these vicious bounces that lead to FOMO and all sorts of crap and emotions, how it's normal.
Yeah, I mean, that is the reality, right? In a bear market, some of the most spectacular rallies to the upside happen. And for instance, we just had a 25% bounce in the S&P in 13 days. You can go back to July 1938, the last time we saw anything like that. And as the chart shows here, there have been some massive, massive bounces. I mean, late 2008, as bad as things were, stocks were up 27%. And then obviously the bottom fell out into March. You think about the tech burst in the early 2000s, the 3-year bear market, we counted at least six of them, 6 separate 10% bounces along the way as stocks went all the way down. It was negative 49%. So the reality is big bounces do happen in bear markets. And I hate to say, this time is different, things that are happening. I mean, this bounce, though, when I look at some of the internal measures of it, I mean, believe me, we think we're going to pull back and have a nice correction. But to go back and retest, like I already hinted at, when 99% of stocks are above their 220-day moving average, that's incredibly rare stuff. I mean, think about 2018, right? We had the big 20% correction, and then 2 weeks later, everything was overbought. I mean, that's the hallmark of major lows when you have a washout market, and then 2 weeks later, everything's overbought. We're kind of there. I mean, 2 of the last 3 weeks, stocks are up over 10%. Put that in perspective, since World War II, that means 2 of the best 6 weeks since World War II have taken place recently. I mean, that's pretty unbelievable. So, yes, this is a bear market rally. We're still classifying it that as of now. But just internally, boy, oh boy, this is positive. Then you see that Bank of America Merrill Lynch thing I talked about, where highest cash in September 11. People still are very skeptical, at least in our view, of this rally. Some people have jumped on and got excited. And believe me, we need one more whoosh lower to get some fear. But reality is this is positive signs to make it a major low, in our opinion. As terrible as the economic data is, this is how markets make their lows.
And then I want to go to this big reversal years chart you sent over of the largest reversals for the S&P 500 that they close higher in the same year. So you got the date of the lows, the max year-to-date loss, and the total return for the year. Walk us through this.
Yeah, I mean, so we were down 30% for the year back on March 23rd. And then the very next day, the Fed kind of announced some new things that they were going to do, and that's where the market bounced, obviously. So as of, the other day, we're down about 15% year-to-date approximately, or as of recently, I think we're approximately 15%. But the reality is, the question is, okay, as crazy as it sounds, right? 3 weeks ago, we never would have imagined this. Could stocks go positive this year? I mean, believe me, anything is possible. But history would say probably not likely, and here's what we're showing. The most of the years ever been down and year to date and finished higher was in 2009, as you can see there, down 25% for the year in March 9th, 2009, and then did finish up over 20%. So, it's nice to say maybe we can come back all the way being green. Reality would say that's probably not the case, but right now, we think it makes sense. The year-to-date S&P can be down between 5 and 10%. I mean, with some more volatility, most of us probably would take that when we were down 30% like we were a couple weeks ago. But it's a unique way to look at it. But the bottom line is big reversals can happen, right? I mean, you can have these, and where does it start? Or when do the big reversals usually happen? Early in the year, obviously. They happen early in the year, so you've got more time to come back, and that's one potential positive. You could say the negative is, well, there's a lot more time for this virus to have a second wave, and we get that, but still, there's still some time, which is obviously time's on your side as an investor, and this year probably won't be much different.
probably one of the biggest things I've learned during all this, as there has been more comparisons to the Great Depression, it's just how brutal a period that was. I mean, imagine being an investor in 1933, markets down 20% at the end of February, and then it ends the year up 44%. It's just mind-boggling stuff. Just mind-boggling.
Yeah, I mean, the stock lost, 86%, I think, from peak to low. And we've talked before. If you look at the Great Depression, though, there were some policy mistakes on the monetary side of things. The Fed tightened on the fiscal side of things. The government decreased spending, increased taxes. There's a global trade war. It was kind of a 101 on how not to extend your economy and how to extend a recession. So fortunately, we don't see any of those similarities. Also, there's no unemployment. There's no Social Security. So yeah, it's maybe apples to oranges, but there's a lot of differences. But this recession is going to be the most violent, vicious one of our lifetimes. Let's hope, right? Knock on wood, let's hope. But boy, oh boy, the third and fourth quarter could be some of the best economic data we've ever seen in our lifetime if we can kind of get past this and long as social distancing continues to work.
And speaking of recessions here, since World War II, how long do most recessions last? It seems like it's like 10 or 11 months based on your data here.
Yeah, what we show here is 11 months on average, median of 10. And, the reality, though, as the chart shows on the screen, markets are forward-looking, like Dennis said at the very beginning, right? You see it about, 5 months on average is where the markets bottom ahead of the end of the recession. This, who knows if March 23rd was a low, but this could be the first time in history where a recession started and stocks made a low the same month. I mean, we don't know, obviously, but that's unique. But the reality is there's going to be some terrible headlines. The stocks are going to keep going up. And that's because stocks are forward-looking, as this chart shows you, where they bottom usually historically before the recession. The 2000s was the only time ever where the recession ended and stocks kept going down after the tech bubble. Wild valuations, huge bull market, a little bit different than now. Every other time, stocks bottom ahead of the recession when the recession ends. And we think that's going to play out once again this time.
Ryan, question and then a comment. What are you looking here for a turn? I'm just looking, we've come back all the way 50%. That's a big number that I'd like to focus on. We teased with it on Thursday, didn't close above it. Teased with it yesterday, didn't close above it. I think, based on what we have right now, it looks like we're going to close above it. And then I see a quick move up to, maybe the up, 29.73.50. What are you keying in here? And I know you're a long-term guy, but just like over the next few days here, is there something that you're focusing on?
Yeah, that 50% retracement. I mean, that's the thing that's right there. It's where we've had a little bit of trouble before, and that's that. Now, from a more intermediate term, I love to look at the percentage of stocks above the 200-day moving average, right? Okay. That's right around 20% or so on the NYSE, and we were like less than 5% just a couple weeks ago. And major market lows tend to take place when that gets up above 25%. When more stocks are above the 200-day moving average, it's internal confirmation that something's changing under the surface, and so we're not there yet, right? We need a little more. But that, again, is a further confirmation, in my view, that we're not going to see a retest of the March 23rd lows. We'll get a pullback. Just that's a good thing we're watching every single day. And maybe after today's rally, if we have a rally today, we can get that number a little bit higher, closer to that magical 25% above the 200 days, what we're watching.
All right, and just one final comment from me. There is a possibility that Michigan will not lose to Ohio State in football this year.
That's true.
Yeah. I was wondering if you were going to go there, but yes, there is a chance. I mean, it's true. I guess. Congrats.
Yeah. Maybe
let's hope not, though. I mean, let's hope we get back to normal.
But losing twice in 2021 would not be good either.
Well, who's saying it wouldn't be good? I think it'd be great.
Can't lose if you don't play. Can't lose if you don't play.
Chris Fowler said they may do the college football season in the spring. How weird would that be? Holy mackerel. And conflicting with basketball. But let's just hope that's not the case. Ryan, great information. Ryan Detrick, LPL Financial, one of our top analysts that comes on the show. Thanks, buddy. We'll talk to you again soon.
Thanks, guys. See you next time. Bye-bye. Take care.
All right, continue to climb here. We're off the high off the pre-market session at 28.08. First target would be yesterday's high at 28.19.50. Triple D, big buy imbalances out there. What are you seeing?
Yeah, they're significant. I wouldn't say it's probably where it should be. I
Okay.
mean, from what I'm seeing from the imbalances, we give you Johnson Johnson because the report. I'll give you the earnings ones. 157,000 to buy. Johnson Johnson projected opening at this point in time is $145. Obviously, that changes as as orders continue to come in for the next 35 minutes. J.P. Morgan 121,000 to buy. Wells Fargo 201,000 to buy. So Wells Fargo showing some significant buy. Or buying interest at the open, despite obviously the huge earnings miss here. Stock still trading in the green, so those are holding up well. If you want some other highlights, Abbott Labs 99,000 to buy. Again, on some of these days with the market rips, you actually see the COVID plays, and Abbott is a COVID play right now, actually go down. So that's one I might fade. Looking Boeing, holy Boeing, 280,000 shares to buy here this morning. It's trading up $4. Just jumping over Disney, House of Mouse, 183,000 to buy. That's significant as well. It's trading up 2.9%. They're pretty much buys across the board, and they're fairly significant. So I'm not surprised the market's trading substantially higher.
All right, Spencer, we got about 4 minutes here. Any more earnings to preview from after close, analyst ratings, or just Spencer jargon? Do we have a new sign, Spencer? I don't think I've seen
a new sign.
Yes, we do have a new sign. You want to see my new sign?
I can't see you right now. Why did you go away? There you are.
There. Our new sign is that guy today.
Jay Powell paid for this sign. Did he really?
Yep. He's paying for everything else.
You got your check already?
He's paying for everything else. So
you didn't get your check already, did you?
No, I did not. But apparently, everyone's supposed to get them by like the 18th.
I would have thought that sign would go up on the 18th then.
Okay.
So you're pre-buying stuff with your Jay Powell money.
This sign is forward-looking. What can I say? No, I didn't get mine yet. I know people.
Is Jay Powell going to send me a check?
No.
No. Justin Trudeau maybe, but I don't think I qualify. Actually, I don't think I get a check from Justin Trudeau either. Although I guess in Canada you can get something for your kids or whatever. My wife was looking into that, so a couple $200 a kid or something.
As far as earnings after the close here, we're going to get JB Hunt, and we're going to get a stock that was mentioned on yesterday's show, the Valence Company. It's a cannabis play. VLNCF is the ticker on that. Those are the two that are on my radar for after the close today. And then as far as earnings tomorrow morning, let me pull up my calendar here in the pro. We got some big ones. Yeah, Goldman Sachs, Bank of America, Citigroup, UNH. All tomorrow morning. So we got some big names.
And then Thursday you're getting AMD. First look at the tech. Abbott Labs 2, and then Friday you're getting Honeywell and Schlumberger.
Yeah.
I don't know how many people are excited for Schlumberger. So you got some big. Obviously, we always say the financials kick off earnings season, and they do. So you're getting all the big names. Really tomorrow. Bank of America, Citi, Goldman, Morgan. Holy mackerel! It's going to be the banks. If Wells Fargo and Citigroup are any indications, the bar is set very low, obviously. So we'll see how they come out, but hard to be a seller ahead of these earnings reports when they're buying them on bad earnings.
Yeah.
And any ratings? I saw this one stock.
Tesla.
We talked about. Did you see the CORR? This thing is getting.
Well, did you see what it did? Yeah, they're coming out, so they're one of their biggest customers not paying them rent, which is obviously an issue. But then they cut the dividend. So Spencer, I'm taking you're usually the news guy.
All right, Cox Oil is the company, is their tenant who is suspending their rent payment. So as a result of that, right, Core Energy is lowering their dividend to 5 cents a share.
The REITs, the point of owning a REIT is to get paid the dividend. So when they get hit on the dividend, obviously, hopefully that's only going to be temporary, but we don't know in this case. Obviously, a lot of these REITs, we've talked about a few of them before. We don't know who's going to survive. I'm scared of all this stuff, but they're getting hit substantially. You can look at the preferred stock too, which is CORR.PRA, and that's getting slammed to the tune of 20% here this morning as well. So they're hitting it. When your biggest tenant or one of your big tenants decides to not paying the bills, it's never a good thing.
Definitely. All right. 8.
What about ratings? So we didn't just want to give core. Sure. There has to be some pretty good ones in there too, Spencer.
No, I mean,
upgrades really? Not that much jumping out. Workday. Oh, thanks. I'm on Workday in my long-term portfolio.
Workday's up in Morgan Stanley to overweight. Coupa Software up in Morgan Stanley to overweight. Chubb up at Deutsche Bank to hold. I don't know. This doesn't interest me. As far as downgrades are concerned,
Etsy downgraded.
Okay, Etsy downgraded BTIG to neutral. Doesn't do a lot for me.
Deere downgraded City.
Whatever floats your boat. Yeah. Deere to neutral at City is notable. Square to neutral at UBS is notable. I guess CME to underperform at Keefe is interesting. Kronos to neutral Piper Sandley. I don't know.
Nothing.
Yeah,
Nothing
They're just
significant.
not influential. I mean, when you look here this morning, here's Square downgraded. Square's trading up 2.7%. We've been talking about the ratings meaning almost nothing. I mean, on the little stuff, and on Tesla, they're always going to mean something because it's a widely followed stock. But, on some of the little stuff, it might. But on your big names, you're getting upgraded, downgraded. It's just noise at this point in time. They are moving with the overall market. I mean, on a normal day, Square gets a downgrade, it's probably going to be down, but that doesn't matter because we're just moving everything with the overall market here. Market's up 1.8%. Square's beta's higher. It's grabbing it off of that. They completely ignoring the downgrade.
The one contrarian here is Oppenheimer is initiating IQ at an outperform. So coming out bullish on the names where I think we saw IQ. I think it
wasn't Muddy Waters saying that
they could be
accusing them of fraud.
They could be the next Luck and Coffee, is what they said. So
that's interesting.
Oppenheimer out bullish on IQ this morning.
I think it was Muddy Waters, if I'm remembering right, that was accusing them. So we have no confirmation that IQ is doing anything wrong, but we had a big short seller that was obviously accusing them of doing some wrongdoing. So interesting, it's popped back significantly since that report there. You can see the low, $14.51. Stock is lifting here this morning on the upgrade. I'm not buying anything China right now, except I own Alibaba. I'm scared after the Luck and Coffee issue. I'm just scared. I'm a little turned off on some China stocks. If I'm going to buy them, I'll just buy an ETF.
That's what I say. All right, that'll be it for our show. I want to thank our guest, Ryan Detrick. Thanks to all of you in our chat, both of them, the one on YouTube and the one on premarket.benzinga.com. You can always catch a replay of our show on YouTube or catch the podcast on iTunes, SoundCloud, Spotify, Stitcher, or TuneIn. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Joel and I will be back with you at 3:40. In the meantime, everyone, have a great rest of your day and stay safe wherever you are.